The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 12th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is they're trying to communicate to you and I just past 1 o'clock in the afternoon. Hope everyone out there had a great weekend. It's great to be back with you. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. This is Magical Monday. Of course, it is the Hotel California, sponsored by none other than Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 18 points. She's trading at 17,103. S&P back 2 points at 2,013. NASDAQ composite off a point. Russell down about 4 points. The DAX closed up $23.23. I like that number, 23. I also like 13, but 23, not too shabby out there. The FTSE down $44.98. ES Mini, that's back about $3. We're going to take a look at that. That's trading at 2004.75. Goldilocks is up $8. It's on hold. It's trading at 1163.70. Silver is up 2 pennies. Light sweet crude, not on hold. That's back $2, trading at 47.59. Lead the charge to the upside. We've got Priceline up $23. I believe that's trading into its high volume high out there. Regeneron Pharmaceuticals is up $20 as well. We'll go see what that's traded into. Chipotle Mexican Grill up 11. Amazon up 6, Amgen up $4, O'Reilly Automotive up 3.5. To the downside, we have VMware off about $9, down about 11%. Eli Lilly and Company, that's down 8%. BlackRock off $5. Buffalo Wild Wings down $4.50. Wynn Resorts down $4. So hopefully we'll check in on all of those. But first, let's begin. Well, hey, today is Columbus Day. So you got to, 1492, right? 1492, Columbus sailed the ocean blue. Well, actually, it was October 12th, 1492, that Columbus landed in the Americas. So that's what you and I should be celebrating. Today is Columbus Day. The banks are celebrating. Post office is celebrating. Government is celebrating out there. So you and I, we ought to do a little bit of celebration ourselves out here. The market should be light volume. So we'll take a look at where volumes are at. But we won't pay too much attention to volume. Instead, we'll just go take a look at price, see where things are trading into, what patterns are setting up out here, long-term, short-term, and, of course, anything else that you would like along the way. So let's begin. On Friday, we took a look at price trading with inside a narrow trading range. Really the same thing today. Let's actually start with our 10-minute charts out here, both for the NQ, that's the left panel on my screen, and the ES, that's the right panel on my screen. What we can see here are the two horizontal yellow lines that show up on my screen out here. That is the opening range. That is the time period between 9:30. So even though this is the equity futures contract that you and I are looking at, this is still the time period of when the cash market starts trading, 9:30 a.m. All you need to do is take the highest high, the lowest low between 9, so it doesn't matter what time frame chart you use, and just mark those as your indicator for the opening range. If the market is able to break above or break below and never look back, you've got a day that is trending. I mean, it just is fairly simple to use this as a tool out here. Sometimes, some days, we see that the NQ or the ES or the Dow Russell 2000 is stronger or weaker than the others. In this case here, we can see that that's really not the case out here. Neither the NQ or the ES is really broken above much of the top of its opening range, meaning that high between 9:30 and 10 a.m., nor has anything actually broken down below the low. So we'll call 2003 inside the ES Mini an important level of support out there to give us some kind of indication as to what might take place. Likewise, it would not be unusual for price to finish somewhere within inside this range out here. So from a trading perspective, a 5-point trading perspective, those that might be trying to trade momentum or short-term trading cycles within inside the ES Mini, today's a day to absolutely take off. 5 points is not very much. It's pretty hard to come up with a reward to risk scenario that makes sense on a sideways day to actually trade that intra-day. If we take a look at, let's see, what time period, let's look at the NQ out here. So let's take a look at it and what it's done thus far. Now, if we take a look at coming off of that nice little bottom out here, this was back on about 1 o'clock in the afternoon, back on October the 8th. If we take a look at that low, we know that price was moving lower. You and I picked this out. We know that price was moving lower with less relative weakness. We also know we got a nice little bullish reversal signal that took place during the following half hour. The market simply moved higher from there. Now that rubber band has stretched. This is a 30-minute chart, by the way, of the NQ that we're looking at. The same type of pattern that was formed at the bottom. Sometimes these things will sync up with regard to their waves. Sometimes they don't. Both are buyable and sellable patterns. What I'm referring to there especially is that seventh wave. That seventh wave singing in the key of G. Now, we don't have that at this stage. That doesn't mean we won't get it. We are in the sixth of what I like to look for as 7 waves. Just because you have a price relative strength divergent pattern or seventh wave, that doesn't mean that the trade is automatic. You always have to use stop protection when you are trading out there, especially when you're trading. I believe you also need to use it when you are investing. So what we do know is a similar style bottom that had formed out here, we can see is taking place up at the top. Now, back on the trading day at about 10 o'clock in the morning, this was on Friday, we saw price move up. We saw a key reversal session, a bearish engulfing. Let's go ahead and explode that up on our screen for us. Well, that's really exploding. There we go. Let me explode it. Well, son of a gun, what did I do there? Let's see if I can do this. That didn't work exactly how I planned it. Oh, that's really weird. Okay, close. Okay. Now, as we... Sorry about that, folks. Fairly weird. Okay, so as we take a look at this candle session, it's labeled with the letter E on it. See how price went above and below the prior session out there? That's really what's referred to, or can be referred to, as a key reversal. Key reversal session also needs to come from or needs to be in an extended condition out there. So if you see a key reversal in the middle of a move, to me, and I really believe to you as well, it doesn't have as much meaning. And then you call that really an outside day, or an outside bar, because in this case here, we're looking at 30-minute charts out here. So just to show you the importance, though, of that, take a look at, well, let's just draw a line. Let me do this here. If we just simply draw a line, oh, that's weird. Huh. I don't know what the heck that is. There we go. There's a, Okay, well, that's a line. That's interesting. Let me just try to grab it this way. Well, okay. I've never seen that little diagram on my chart before. If we take a look at the high of that candle, you can see how that has acted as resistance. So inside the NQ, a resistance area to be looking for is going to be 43.74.75. Now, during that candle session, what you and I also noticed is that price came down and tested its task market profile low. That's a little dashed green line on my screen out here at 43.56. So 43.56, or a close below that, we'll call 43.54 right now. A close below that would suggest that the retracement that really each of us should be anticipating out here is underway. And then it's a matter of trying to identify where is that retracement likely to head to. At this stage, though, until we see this 43.54 level fail, we just have a sideways consolidation market. Is this going to fail today between now and 4 o'clock? I don't know. I do know that there is we'd have a market that has stretched higher than it should have. It doesn't have the same type of a strength. It doesn't really matter if it's holiday. This was occurring on Friday as well out here. And so that's just a pattern that says on a 30-minute chart, trade within a 30-minute chart, that says, hey, beware, or buyer beware out there. Of course, the sellers need to beware as well. So that's in the NQ on its 30-minute time frame. If we go take a look at the 2-hour time frame, we're going to see a similar pattern set up out here. This says 43.28. So if on the 30-minute chart, the area that I gave you fails as support, you should anticipate a move down to about the 43.29 type level out there. If we look at a 5-hour chart, the 5-hour energy drink, if we take a look at it, it doesn't look bearish at all. Quite frankly, it's beyond a seventh wave move out here, so we can forget about that idea. If we're looking for bearish reversal signals, we actually would see one if during this 5-hour period, let's expand it out now, the low that came in at 9 o'clock inside the NQ, so this will be another important level for you to watch, 43.51 and a quarter. Now, this candle here closes at 2 o'clock, I believe, right? Yeah, 2 o'clock. So you got another 45 minutes. If by any chance we are to see a move below 43.51.25, and as long as the body of the candle is red, one tick below the open, that too would qualify as a key reversal bar out here. So it's subtle. You might not ordinarily take a look at it and recognize it as a issue or a problem out there. It could be an advance warning. Now, I say it could be because, look, we had a key reversal bar out here at this bearish engulfing candle at 4 o'clock in the morning. That was on October the 9th. That turned out to be nada. Not a darn thing out there. So that's what's going on as we take a look at the 30-minute, at the 120-minute, and at the 300-minute chart. Of course, if we take a look at the daily chart, right, just to put it all together out here, we know, you and I were taking a look at this little descending price channel inside the NQ. And we can see that price is just barely squeaked above that descending price channel line. Today, it's actually pulling back and testing that area. If it can hold this, then that says that it has every reason to want to resume its move higher out here. If price comes back inside that descending price channel, then what that communicates to you and I is that that's a failure. And failures of any type of channel, horizontal or diagonal, when they fail and they get back inside it, it opens up at least the last swing point for you to take a look at. So in this case here, inside the NQ, that says it could come all the way back into the September 29th area. Doesn't say it needs to come all the way back down to the August 24th level, but it would say your first target's always going to be a swing point. So that would open up the door, or some retracement thereof, some retracement from the bottom to the top. But first, price has to get back inside that descending price channel. At this stage, that is not the case out there. So that gives us a fairly decent overview as to what's going on inside the overall market out here, with the Dow being up about 20 points or so, 24 points as we take a look at it. Inside the market, we've got gold. I mentioned gold was up $8 out here. And if we take a look at gold, I will switch over to this chart. And when we come back from the break, we're going to go take a look at Goldilocks. I'm going to give you a feel as to what it's doing over the longer term charts out here. This is Steve Rhodes with TFNN. I hope you're having a great day. As always, great to be with you. And we'll be back in just a few. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got gold trading in the 1160 range out here. Now, as we take a look at the gold contract, this is a version of the continuous contract. I've got all the contracts here stitched together. What we can see is a combination of factors. Number one, gold has made a 100% move by getting back to the August 24th high. The August 24th high, 1168.80. I believe we were at 1168.60 today. 1168.60 so far is the intra-session high inside of Goldilocks. Now, so that's one of the things that it's doing. Secondly, we've got a nice little moving average cross here, a little 1939-day exponential moving average. What we can see is that, and when you see that's a longer term set of moving averages out here, and when you see that this is now on the bullish side, so you got 100% move. We've got the bullish crossover of these moving averages. It is really the first time, other than at back here in May. So at the highs back here in May, we saw a bullish crossover of those two moving averages for a period of about 8 trading sessions. Other than that, the last time that we saw anything of significance was all the way back here in June of 2014. So it's worth noting, and we know that gold is trying to make a run. Now, what gold needs to do, it doesn't have to do it today, but what it most certainly needs to do is to get above that 1168.80 level. If it can do that, that sets up a larger A to B equals CD. So let's take a look at the bullish case out here, with your A point being July 24th, your B point being the August 24th, likes 24s. And if we take a look at September 11th out here, that would be our C point. So uno to uno, 1-to-1, would say price would travel up to about the 1193 area. 1900. How about that? 1193. Now, 1193 takes us into the little swing point, this exhaustion area back here on June the 18th. That was up at the 1206 range. So I'd say 1193 to 1206 if, in fact, gold can close above 1168.80. However, and also, I guess to the bullish side as we speak right now. Let's get rid of the A to B equals CD. Let's pull this back further. Remember, gold had broken through a short-term trend line that was coming off the January 2015 level. We can take that back a little bit further and go back to the highs in October of 2012. And those highs were in the $1,800 range. So if we use that as our touch point for our trend line, and then we use the highs out here in January for our trend line, we can see that this morning, or last early in the morning, we saw that gold broke out above that level. That's very good. That's bullish. To anticipate that gold can come back and test that, and then stay out of that channel line or that trend line out here, that would be bullish. So it is 100% move. It's tired out here. It has to be able to break above those levels. We're not going to really pay attention to volume today to give us any kind of an indication, but that trend line is something for us to pay attention to. Now, if in fact gold can break above that level, go ahead and form that at least the 1-to-1 A to B equals CD. We know gold typically makes more than a 1-to-1 A to B equals CD. What gold would be doing from a much longer term perspective is the following. You'd go back to the highs all the way here into the back in the 1900 area, back into the September in 2011 time frame. The actual high, what was it, 1891? So at 1891, you could use that as your trend line, and then coming all the way back here to October in 2012. That would say gold would run up into the 1400 area. You're at 1164. But you got to take this one thing at a time, one step at a time out there. Certainly the move this morning, it was up, as I say, a few dollars higher than where it's trading at right now, was impressive. But that's in the case of Goldilocks. Now the question is it gold that's telling us the story, or is it the mining equities? And if you and I go take a look at, it doesn't matter whether it's the HUI or the XAU, so let's go take a look at each of them. When we began the show, we were looking at the 30-minute charts, we were looking at the 120 and the 300-minute charts out there. One of the things that you and I looked at were those key reversal sessions out here. Now, in the case of the HUI, the miners, the XAU, what we can see that has formed today is a key reversal session. I'm going to say that the market is relatively stretched. If we take a look at the relative strength indicator, it got up to a high of about 68. That's close enough to the 70 level. That was on Friday out here. Actually, this morning at the open, it was up higher, so it was above that area. So that's another way to determine whether something might be overbought or oversold or stretched. And so the HUI, that qualifies. Now, the last time that you and I saw a outside day / key reversal style candle inside of the HUI happened to be on August 21st. And when that candle formed, we saw the price of the mining equities in unison go ahead and pull back all the way back and test out the lows from back in August. So that is something for us to pay attention to. By the way, inside the XAU, as we take a look at it right now, we'll go take a look at some of the mining equities, see what they're doing. You also have a outside day, key reversal day going on there. Something to think about. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's finish off gold by taking a look at the mining equities. Now, the reason we want to do that is typically, but not always, gold and the direction of gold and the mining equities will do the Texas 2-step out there. And if we take a look at that here on this chart, the top portion of the chart, continuous contract, these are the closing prices for gold. Bottom chart is the closing prices for the HUI. And you can see how well timed they are. Sometimes they're usually to the day, but sometimes they're off just a tad out here. And so it's worth paying attention to, because the question is, who's telling us the story out here? So to turn the chapter, turn to the next page inside of the mining equities, let's go take a look at a couple of strong ones and a couple of weak ones. See if there's any kind of message out here. And as we take a look at Rand Gold, that's where we begin today's story. What we're taking a look at Rand Gold is going ahead and testing its 100% movable move level. That is the August 21st swing point, which had 1.4 million shares, and you are up today with 609,000 shares. It's up with light volume. If it closed below $68.12, that says you have a failure at a swing point, says you couldn't bust them up. That says you could go try to bust them down. Now, it is a light volume day out here. Would price be moving down even further and heavier in volume? on a day like today? I don't know the answer to that question. But if we take a look at busting up down, the level inside of Rand Gold that it would need to break through in order to get that bust them down scenario going is probably the 62.44-ish area. That is the top of its weekly profile and the bottom of its current daily market profile out here. So what the HUI, the XAU, is suggesting to you and I with those outside days, and you need key reversal bars, you need confirmation the following day, like every single candle that you would trade off of. And if we see lower price tomorrow, you would anticipate that $62 or so is where Rand Gold, and this is one of the stronger looking stocks. Another strong stock out here is Agnico Eagle, AEM. Now, in its case, it's dealing with a trend line resistance level. If we take this back, you've got to go back a long way out here. So this could be giving us a significant picture as to what it's doing. Come on, work for me. We're on the air. There we go. And you take a look at its trend line. That takes you back in the 2010 time frame. So that trend line, now let's just go ahead and fast forward this thing, and let me go ahead and, in this case here, it's really stalled at a significant level of resistance. Getting above this area and getting above its daily market profile high, which is $29.46, would be very bullish out here. But it's run into resistance. So that says, all right, this could easily pull back at least to the bottom of the daily box, 27.36 out there. If it fails there, you'd anticipate about 25.91. Volume today, 1.3 million shares out here. A couple of days ago, 4 days ago, 5 days ago, it had done up at these highs 5 million shares. This is the stronger stock out here. Very, very weak. This is failing at a swing point for sure from just a few days ago. So that is, and then somebody in the den says AEM's also made a 0.618 retracement level. So that would set you up for a Gartley sell pattern. You've got a little bearish engulfing candle that's going on today. I'm not suggesting that you sell short AEM, but I would suggest that you would be watching any kind of retracement to identify areas to perhaps buy in. Of course, it all depends on what's going on with gold as well. Let's take a look at one of the weaker ones out here. Let's go take a look at it. It's really got Barrick Gold. If we take a look at Barrick, let's go see if we've got any message out here inside of Barrick. It's just simply run into the swing point area. No, it hasn't even made it up to the swing point area. It's just got this little, I guess I don't. In the case of Barrick Gold, we know 797 would be a resistance level for it. Let's look at Gold Corp, and then we'll go move on to oil for Danny in Atlanta. Let's take a look at Gold Corp. What is it doing today? Not really testing anything of any significance out here. Volume today, 6.9 million shares. So not a really, I guess that's more of a bullish sign than a bearish sign, because the weaker of the stocks is, doing okay. At least nothing that sticks out at me. Let's go take a look at what's going on inside of the world of light sweet crude. Back $2.21, trading at 47.43. Now, as we take a look at this, a couple patterns that we can look at. Number one, it was trading inside this little wedgie out here. Normally, you can take the base of the wedge and figure out a price characteristic, a measured move once you see a break of that wedge, which was back here on the trading day of October the 5th. But that would take us up into the $50-ish range, probably think about $53 or so, $52, $53. That hasn't happened. Inside, and the question is, hey, where is a good buy area inside of light sweet crude? Well, first, I want to go ahead and take and turn off our market profiles. And so on any pullback, a retracement back to that descending trend line, as well as the horizontal level at the 43.89 area, would stick out to me as one potential spot for a buy inside of light sweet crude out here. Secondarily, if we go ahead and we turn those trend lines off, let's turn off that, let's turn off this, and let's go ahead and turn on our weekly and daily TAS market profiles. What this also shows us is that the area where it had moved into, we saw a little doji candle on Friday, and that was a doji close above that market profile out there. Today, we're seeing the leaves fall off the tree. What this says to you and I is that the likely area where price would pull back to is going to be $39.66 to $40.30 out there. So you've got a couple of different tools and indicators that really say that $40 area is likely the place to go ahead and buy light sweet crude. Your stops, you got to take a look at the average days true range out there. It's probably not much more than close below the April 24th level. That's if, in fact, light sweet crude pulls all the way back in that 40, 30-ish range. Let's go out to British Columbia, to Janet. Janet, thanks for calling. Thanks for holding. How are you today?
Hi, Steve. I'm very well, thank you. I was just wondering about the nugget. I was in it, but I'm out of it now, and I'm wondering how far back you think it might go. There's quite a big gap down at 27, 21 area, which was on the, that was back in the 2nd or 1st of October or something. There's also another smaller gap around 38 on the
right.
5th.
You know, what I would say, I would say that to answer that question, we would take a look at we use a few different tools. The first tool, since that's on my screen, so we'll use that first. And you go ahead and write down these numbers. If in fact gold, well, first it's going to be dependent upon what gold does. If gold, as it's broken out today of a longer-term trend, just pulls back, tests it, and rejects it, then that's how you would also time NUGT or some of the specific miners, because they all really do work in tandem. They don't have to. It can be off by a day or two, but for the most part, they do work in tandem. So I would have one eye on what the gold contract is doing. If we just simply ignored the gold contract and we only looked at the NUGT chart to try to identify areas of support and resistance, at this stage here on a further pullback, the first area that you and I would look at would be right around 35.69. That happens to be the weekly point of control and the daily market profile high. That should act as good support. So if you're looking to build a position in NUGT and it's pulling back to that area with light volume, that would be the first place that I would take a look at. Now, you mentioned a gap that was in between the candles from October 2nd to October 5th out here, and that gives you a price range of about 33.43. So you're within, that entire range out there. If you were to see a close, if volume starts to pick up for any reason and move back, Janet, then what you're looking for is probably a test of around 27.70 or so out there. And really what you'd be looking for, I would say, is probably the test of the high of the swing point from September 11th. And that is 27.40 and has volume of about 5.7 million shares. So that's using market profiles and swing points. If I turn those off, then another place that I would take a look at as I were monitoring, a setup for getting into a trade long NUGT is I would just simply go from that September 11th swing point low to the high of today. And so you would want to start focusing on levels like 39.55. That's your 0.382 retracement. That might be the pullback if gold just simply comes back to that trend line, rejects it, and moves higher. So that could potentially be a buy area. Or 33.46 happens to be the 0.618 retracement. Now, the 33.46 area lines right up with your gap that you were looking at, and basically within a buck or so of the market profiles. So I think the magic number for you on a retracement, volume, as long as volume's not anything significant on a pullback, is that 33.50 area. That's what I'm thinking. How's that sound to you, or what questions does that pose?
No, that sounds very good, Steve. You've analyzed it very well for me. Thank you.
Oh, my pleasure. Thanks so much for listening. Now, the other side is that, I am surprised. I was surprised that the miners didn't move higher this morning, because they moved, they opened up higher and clearly they have sold off. So you're not in a trade at this stage. Is that correct? You're not at least in a NUGT trade?
No, not right now.
Yeah. Okay. I would wait for those areas. The other thing that Nugget has going for it, unfortunately to the downside, is this a big downdraft from July 20th, and that had about 8 million shares. And we can see if we put the line of resistance across, which shows up in yellow on my screen right now, it really needs to get some real energy going. So I will suggest to you that during this time period here where there may be a pullback, I believe you would be better off to look at individual mining equities than you would the overall NUGT.
Okay.
Because there's some really weak dogs in here. And not that they can't take off, but there are some really strong-looking stocks, and I think those are the ones that you'd like to ride up to the moon with.
All right.
Okay?
Thank you very much, Steve. I really appreciate that. Thank you.
You bet. Thanks so much for calling. That was Janet in British Columbia, and that was the ETF for the mining equities out there, NUGT. Just like all the ETFs that we take a look at, you can go online, you can find out what the top 10 holdings are. I'll do that for you right now as we take a look at NUGT. There we go. This will pop up in just a moment, or it should pop up in just a moment. There we go. And if we take a look at the top 10 holdings, okay, we were going to. Why isn't it showing me the top 10 holdings? I think I need to go to the GDX. Let me do that. GDX. That might be a little bit easier, Janet, if I do that. There we go. So in the top 10 holdings, which are 35 individual equities that make up the GDX. And the NUGT and the GDX are basically the same. I believe I don't know if they're exactly the same, but they're really close to being the same. So you got 35 equities. The top 10 holdings represent 54%. So you've got 10 and 25. 25% represent 45%. And that's why I say if you go through that top list, Gold Corp, as an example, is one of them. Basically a dog. Newmont Mining, I'd have to, Barrick Gold, basically a dog out there. Newmont Mining, NEM. If we go take a look at it, I don't recall, but let's go look at it. NEM as an example. A dog. Another dog out here, and it's got really major resistance out here. It's a downdraft from July 20th. I think if you go back to that listing, you can do it through Yahoo Finance and some other places out there. You can actually go to the actual fund that for the GDX, and you get the exact holdings at the end of the day and exactly what their weighting structure. If you go through each of those stocks, you will find the ones that are real strong out there, and those are the ones, in my opinion, that you would be best to hop on board with. Okay, so we took a look at oil. We took a look at gold. I think we've looked at this enough. Let's go take a look at something that I had noticed here inside the New York Stock Exchange. Now, and we've got a listener that had sent me an email early this morning, so I was like, oh, this is coincidental. He sent me an email that actually was referring to what it is I'm about to show you. And it's a couple of things. Number one, the move that we had through last Friday inside of the New York Stock Exchange was substantial, significant. You're going to see just how significant. When we take a look at the price oscillator, when we take a look at advancing, declining issues out here, we can see that this price oscillator got up to a high of 303.14. 303.14. Now, also, what was interesting as I took a look at that. Now, the reason why that's important is because what you and I want to know, is this the mark of an initiation move, or is this the sign of an exhaustion move? And that's something that we always have to take a look at. So you and I have to go back and take a look at past pattern behavior. But as I was looking at this, and you're going to see, actually, if we go back to the most recent high out here in the 300 level, where that's going to take us to, how far back do I have to go? That's going to take us back to right here, which was on a trading session July 3rd, 2012. And we can see that as price got up and we made that type of price oscillator move, we saw a retracement for about 4, 5, 6 days. And price pulled back right into a gap out here. So pulled back into a gap, and I said to myself, that makes sense. I know there's got to be a gap inside the New York Stock Exchange. So if this is an exhaustion move out here, at least price ought to pull back to the gap. So then I go all the way over here on my chart. I take a look at where is the gap, and I'm looking at the gap, and I see that, and I'm like, oh, my goodness, I hadn't seen this before. But at this bottom that we just saw that occurred back here in the end of September, all of last week, Jobs Friday, we actually have an island bottom reversal out here. Now, a lot of people, a lot of bears would see an island top reversal at the top, and they would get all giddy about the bearishness of the news of the New York Stock Exchange. I wonder if they're now as bullish as what an island top would do, but instead we've got an island bottom. Steve Rhodes with TFNN. We get back. Let's further look at this chart out here.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I believe the technical term is called a scotoma. Scotoma. You've done this probably before. You know people like this, you know, where you go into the refrigerator, the cupboard, you know something is there. Somebody asks you to go get it. You know, could you get me the salt? Give me the ketchup. Where is it, honey? You know, it's in the, you know, it's where it always is. You open up the door, you can't see it. You're like, it's not here. Right? And you go back and forth for a few times. And then sure enough, that person, whoever it is, comes over, opens up the door, and pulls it right out. It's right in front of you. It's kind of like when you go and you buy a car, right? Maybe you buy a car, and you know, you really hadn't noticed as many of the car that you just bought until you've actually bought it. Then you start seeing it all the time out there. Well, in any event, sometimes out here, you know, and that island bottom was actually sitting in front of me, and I didn't really see it until I was really trying to understand, hey, exhaustion top or initiation move out here? You know, what's going on? And the easiest thing was to say, hey, let's simply go back and take a look at other examples of that. Now, what's interesting here, and I was planning on spending more time at it, but that 95.40 area, that actually has some significance. It wasn't anticipated until I went back and was just simply looking at the charts out here. Now, you're going to see another island bottom. That's the significance. There was another island bottom that formed out here between June 19th and July 5th, 2013. Price actually came back during this decline that we had in August. It stopped right there at that gap. It was an open gap. It was an island bottom out here. There was another island pattern that had formed after this one, suggesting that that's a pretty strong area out here. Now, there are not a lot of instances over time where we see the New York Stock Exchange price oscillator get above 300. So that's a cool thing. It's sort of a cool and not cool thing, because you want to have more sample sizes in order to be able to draw any kind of conclusion. Of course, we can see here we had an island bottom that occurred before we got up to that 300 level, just as this time. And this was back here in 2012, also in June of 2012. Another small little island that formed back in July of 2012. By the way, these islands here have never been tested. Those gaps are open. The one here from June of 2012, the high is somewhere around 73.47 or something along those lines. As we come back further out here looking for those 300s, we can see back here on the trading day of July 26, we got up to 2010. New York Stock Exchange got up to that level, and we can see the price continued to move higher, but the oscillator continued to make a declining top. So that is always a signal that you're going to see a retracement. We don't have that as we speak right now, but there was a retracement that occurred after that, and I would anticipate that that would be something that would occur this time too. So we either have this exhaustion move that's going to do an immediate pullback, or maybe we're going to have price gradually move higher with a declining price oscillator, and we just have to be on the lookout for when that reversal pattern might show up out here. If we pull back even further, this takes us back into March of 2009, when the New York Stock Exchange price oscillator got above that above that 300 level, and then it was just simply off to the moon. Of course, that was a market that was so generationally low forming out here that it's no wonder that price just moved higher. Now, prior to that low, so what happens in a downtrend? Because one could argue that we're still in a downtrend out here. Boy, I got to do this quick. January 7, 2009, we saw a reading above that 300 level. Price began to sell off into the March 09 low. We saw another reading back here in November of 2008. I won't go back and do all the other ones. There aren't that many more out here. The reason why I say, let me see if I have this. Oh, I hope I got this out here. Yeah, there we go. Here's your charts that take a look at basically the 6 primary indices. And what we can see here, the NDX is just slightly broken above its downtrend. Not the case in the S&P 500, not the case in the New York Stock Exchange, not the case in the Russell. The NASDAQ Composite right up above its trend line. And the Dow, it's got quite a ways to go before it actually gets up to that trend line out there. So just be cautious. That's all I say. Use stops on both sides of the trade, and you'll be in good shape. Stay tuned. Talking about good shape, stay tuned, because we got our man David White. He's going to come up next. He'll take care of you from here, and then he'll hand the ball off to Tom O'Brien. I'll see you back tomorrow on Terrific Tuesday, sometimes Turnaround Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.